All right, welcome to the daily market recap for Tuesday, October 7th. In this video, I'll be taking a look at the action day from the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups going into tomorrow, like we do with every daily recap. So if you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Starting off with the indexes, and I'm going to keep this a pretty short video. I apologize for getting this out so late. I know a lot of you will be watching it in the morning. A couple things came up, so we'll just roll with it. NASDAQ, another day of weakness. Well, I say another day of weakness for the NASDAQ. Yesterday, we made new all-time highs, so just a little bit of weakness under the hood yesterday throughout the market, but indexes acted well yesterday. Today, we made a new high, but then reversed, took out yesterday's low, closed right on the 5-day moving average after undercutting and reclaiming the support gap low. This is the second time in like 3 sessions that we've pulled back into the 5-day moving average. And after you start an acceleration trend where you go support at the 50, support at the 20, support at the 10, support at the 5, the sooner that you come back to the 5-day moving average is not usually a good sign. And taking a look at the leaders, the industry ETFs, like we'll do, there's definitely some cracks showing up in the market. So I wouldn't be surprised if we do see some follow through to the downside. Definitely want to hold today's low, at least on a closing basis. If we close below, chances are it's time for a little rest in the market. S&P 500 closed right at the 5-day moving average below the little support gap from yesterday's gap up. Very similar action there. IWO, the growth stocks of the Russell 2000, lower highs and lower lows, closed under the 5-day moving average, tested the 10-day, bounced there and held the support gap, at least part of the support gap. But you don't really want to see stocks that make new highs and then immediately reverse on a pickup in volume, and that's what we are getting out of IWO. ARKK, this isn't doing really anything wrong. Pull back to the 5-day moving average support gap on lower volume than the previous day and well below the 50-day average. So really, unless this follows through to the downside and we lose the 10-day moving average, I don't really see many concerns out of ARKK. And then IBIT as a way to track Bitcoin, potentially another false breakout or just consolidation over the 5-day moving average after making new highs. We'll see what tomorrow brings. That false breakout on August 13th was pretty sharp. We made new highs and then immediately lost the 50-day moving average, had one nice day, and then came back to kind of a breakout retest. Came back into that level a couple weeks later and had just phenomenal action over the last 7 or so days. So it does make sense for some profit taking to happen right around all-time highs. We just don't want to see follow through to the downside at this point. Getting into the 9 liquid leaders, first up is RKLB. Uh, I like that this is leading the leaders because this is one of my current positions, up 5.2% today, higher highs, higher lows, incredible relative strength, and an incredible amount of volume coming in on this breakout into new all-time highs. Exactly what you want to see out of a leading stock and one of your positions. LEU, higher highs, higher lows, new all-time high. Can't be too bearish about that. KTOS, exactly the same thing. Kind of a frozen rope over the 5-day moving average as it extends to the upside. Just incredible strength here. Robinhood, a little bit of weakness. Yesterday, we had that gap up that sold off. Today, another gap up, undercut the 5-day moving average in yesterday's low, closed back above both of them. And both of the last 2 days have come on lighter than average volume. So I don't see too much wrong there. BE, kind of going back to the IWO where I said you don't want to see stocks make new highs and then immediately start to show weakness. It's kind of what BE is doing. We had a really sharp move from $62 up to $95, so almost a 50% move in like 5 trading days. Got into new highs, and we just started to see some weakness here. Closed just under the 5-day moving average, down 1% today. Google, kind of inside candle, closed at the low of the day, back under the 5 and the 10-day moving average. As long as we hold the 20-day moving average and support gap, I think this looks fine. Alibaba and Chinese equities as a whole starting to pull back a little bit. First close under the 5-day moving average in this entire move. Just incredible price action after this breakout. Again, this is a 3.5 year base that we broke out of after earnings. We gapped up on earnings, had a secondary offering that got soaked up. We reclaimed the high volume close from earnings and then just off to the races. This is the first close under the 5 day, so showing that some momentum is starting to dry up. We'll keep an eye for the first test of the 20-day EMA as a buy spot. Tesla, lower highs, lower lows, very slight gap down, but did close on the low of the day on a pickup in volume back under the 5 and the 10-day moving average. We did have a really nice reaction to the support gap right above the 20-day moving average on Friday, had some follow through to the upside. So, kind of like I was expecting, we had a nice bounce. The market's now getting heavy. If this pulls back into that area, that 416 area, that's a spot that I would be keeping an eye for. And finally, we have NBIS, very similar to Robinhood, got extended in the short term. And then two lower volume pullback days today, down 5.8%, close under the 5 day moving average, first close under the 5 day. Um, Man, really, since the breakout on September 9th. So, another just sign that momentum is starting to dry up a little bit in the market. Getting into the industry ETFs. First, we have MSOS. This is the cannabis ETF, and I'm seeing a ton of strength out of cannabis stocks. The ETF itself had a move from $2 up to, $6 on this wick, pulled back to $4, so a 33% pullback. Higher low, closed under the 50-day moving average, gapped up last week, traded above the 5 day moving average this entire time. And then you get stocks like TLRY, which had a highest volume, maybe not ever, but at least in a year, move up 60%, closed over the 5 day moving average until yesterday, where we touched the 10-day moving average. Very strong price action today, up 8%. Um, some other cannabis stocks really shaping up. So it kind of feels like that's going to get that rescheduling that they're talking about. I'm not a cannabis expert, but price action looks really good for this group. XME, metal and mining, really starting to get extended here. Today we saw very, very high volume without very strong price action, only up 0.7%. It would not surprise me if this is the short-term top for metals and then we start to see a decline here. But again, if a stock squats on you, that in itself doesn't mean much until you follow through to the downside and take out those lows. If that happens, then given metal and mining has just gone straight up since April 7th's lows, chances are that this is time for a base. ITA, defense and aerospace, new all-time highs. Financials, which we've been monitoring, continues to bounce between the support gap below and the resistance gap above. Still closed over the 5, the 10, and the 20-day moving average, but really want to see a close over this resistance gap for some positive market feedback. Biotech ETF, I sold this 2 days ago, I think, on October 3rd. And I'm kind of regretting that. Really strong price action the last 2 days, two consolidation days over the 5 day moving average. Today, undercut and reclaim the support gap. And look at the volume on this consolidation, just extremely light. So I might just put that position back on if we get some strength on this, but we'll see what that brings. IGV, the software ETF. We had that squat yesterday, and we were trying to see, is this a squat and then we break to the upside, or a squat and then we follow through to the downside? And we followed through to the downside, but we bounced exactly where we needed to at the support gap under the 20-day moving average. So again, this is kind of this range bound. And then we get to XRT, the retail ETF. Really ugly action over the last 3 days. Uppercut and fail the resistance gap. Same thing on Monday. Follow through, losing the 50-day on Friday on a big uptick in volume. This group looks to be in trouble. PEJ, the leisure and entertainment ETF, another thing that the average people spend money on, losing the 50-day moving average on an uptick in volume. Not ideal there. XLY, the consumer discretionary ETF, bounced, got right near highs. Now we're losing the 20-day moving average on a pickup in volume as well. KWEB, the Chinese internet ETF. I did close my final position out of CWEB. We'll see how this sets up. But again, like stocks that make new highs and then immediately start to get some selling action. When they're extending the short term, I just look to take some profit there. Semiconductor ETF, kind of a bearish engulfing candle on a pickup in volume or above average volume, down 1.9% today. Gold mining stocks, first close under the 5-day moving average in this entire up move after the ugly close gap up on August 20th. So another sign that those precious metals might be coming to a short-term top. And then home builders, we were hoping for a bounce at the under the 50-day moving average, and it looked like we were getting that for about 7 days. Really ugly action yesterday, really ugly action today on a pickup in volume. We're just in the economy that people cannot afford homes, and this is not ideal action. Getting into the long setups, we got 12 for you. First one, Robinhood. Because of the two low volume pullback days, just looking for another extension, lower, undercut, and reclaim the gap zone and the 10-day moving average as the entry. For the stop, I would keep it really tight, just under the low from October 1st. CRWV, we had this resistance gap overhead, so a lot of people probably tried to buy that into strength. Whenever there's an overhead resistance gap, I personally will just look at the underside, look for a support gap, look for an undercut to trade. Now we've got the 20-day moving average in the middle of this support gap zone. Because the market's starting to crack, I want to give it through the entire zone. I don't want to buy anything too early. So undercut of that 122.60 area and a reclaim of that would be buyable. Stop the low of the previous pullback. Open door, we are still in a momentum market. This is kind of like one of the momentum stocks along with quantum names. And yesterday we closed over two resistance gaps, had a nice pop of 14%. Today, at one point, it was down, I think, 7%, undercut the 5 and 10-day moving average, but by the end of the day, rallied all the way back to close positive, up, I guess, 0.2%. Inside day on lower volume, just through today's high is a potential entry. Stop would be the low of tomorrow. Next, we have BMNR. This is a name that got extended in the short term, rallied into the resistance gap, and then again, anything with the resistance gap, I don't want to be buying on strength. I want to be buying on a pullback. Little pullback today on above average volume. Look for an undercut of the support gap of the 10-day moving average, right around that 50-60 spot as the entry there. Stop maybe to the 20-day EMA. That's a little wide for me. I would probably just use like a 3% stop on that one. Next, we have NBIS from the leaders list. Pulled into the 10-day moving average. We had this kind of 2-day pullback. I want to see one more day to really flush out the late buyers here. One spot would be the support gap here at like 110, 110.50, but really the A plus setup, like my bread and butter entry is a first test of the rising 20-day EMA after making new all-time highs. So this spot right around 108, if we see like big distribution, would be the spot that I would be looking to enter at. HIMS, we kind of talked about the healthcare strength in the market with XBI, XLY, also some nice strength. This I bought on Monday after we had that ugly close under the 5, the 10, the 20-day moving average, followed by an unfilled gap up. It's one of my favorite entry points. It's a low probability trade buying that unfilled gap up, but when they work, you catch a lot of people off guard, and this is probably just getting on people's radars now while we entered right around 53, 55. Um, what I would want to see for either a new position or to add to my position on this is a gap down or some type of weakness in the morning, and then a red to green move that reclaims the daily view app, reclaims today's closing price. That would be the entry. Stop, I would keep it at the 5 and the 10-day moving averages. CRDO, first test of a key moving average that lines up with the support gap, usually a good risk reward spot. So we've got that spot at 134.20-ish area. Remember, I want to see an undercut and then a reclaim of that zone. That would be the entry. The stop would be the low of the day. DoorDash, surprised that this is so strong given the economy is so weak, but People are still door dashing, I guess. Won't fight price here. A little bit of a pullback today into that support gap zone. We just want to see an undercut and reclaim of the 10-day moving average, support gap low, and the HVC from their earnings, the high volume close. Elf Beauty, another kind of consumer product that I would expect with weak consumers, we'd see weakness, but it's very strong. After a nice bounce off the lows, over 100% move, we rallied into this resistance gap, pulled under the 20-day moving average, and has rallied since then. Now I just want to see a higher low pullback into the 20-day moving average, right around that 134.50 spot. We talked about biotech XBI. An individual biotech that I would be looking at is CRISPR, CRSP. Really great consolidation over the 5-day moving average. Inside candle today. You could take this on strength because there's no overhead resistance gaps. But the spot that I would really try to size up would be an undercut and reclaim of the 10-day and the support gap right at 66.60. Sedge, SEDG. This is a solar stock, kind of doing a breakout retest here at the 20-day moving average. We closed under the 20-day, so either a unfilled gap up, stop versus today's low, or a gap down that reclaims today's closing price and oops reversal. Then the stop would be whatever the low of the day is. Are two different ways to play this one. Solar stocks, I still think, are going to be one of the leading themes, at least in 2026. It's been leading since like we've bottomed in April, so stock to watch. And finally, we have TME. This is the Chinese equity that made the move like higher first out of any of the Chinese equities. Went from 10 up to 26. Nice 150% move. From there, we consolidated, eventually had some profit taking, lost the 50-day moving average, rallied up, put in a lower low, and instead of accelerating lower these last 3 days, as some Chinese stocks have lost their momentum, this has just been trading sideways. We had an inside candle today. I'm sure no one is talking about the stock, which gives it really nice risk reward just through the 5-day moving average and today's high. Stop at the low of the pullback on this one. Then for the short setups, we got 12 as well. First one is Amazon. This has been weak. We had a rally into the resistance gap. One of the few mega cap stocks, along with Apple, that hasn't made all-time highs yet. But instead of like Apple's hovering right at highs, this rallied into the resistance gap, gap down, lost the 5 and 10-day moving average, lower high, lost the 20-day with the gap down, lost the 50-day on a big extension candle, went sideways while the indexes rallied higher, and now just looking for a break through today's low, stop above Friday's high as that trade. MSTR, we saw Bitcoin slightly pull back from the highs, and MSTR went into full liquidation mode, down 8.4%, losing the 50-day, the 200-day, the 5, the 10, and the 20 all in one go on a big pickup in volume. This really feels like it's starting its stage 4 downtrend. So what I would want to see is Bitcoin have a day or two where it bounces, get this back up into the 5-day moving average, anywhere where we can manage risk just slightly above the 50 and the 200-day moving average. I think this is a stock that's ready to really unravel here. RGTI, this is like the momentum leader. We It's still above the 5-day moving average, but today we did have the highest dollar volume in the entire move. It wasn't the highest overall volume at 156 million. I think this one was what? Yeah, 190 million. But dollar wise, this is the highest dollar volume. And we closed with the doji candle, which is kind of an indecision, meaning the buyers and the sellers were kind of evenly matched today after a little gap up. And with all that volume, without any price appreciation, it just kind of sets the table. If we do get a gap down, then a gap down opening range break would be shortable versus today's closing price. What I would love to see is like an actual highest volume ever, huge push up, like another 20% candle, 30% candle, something that really makes you just kind of laugh how insane this is before shorting it. Because it feels like everyone wants to short these quantum names. And I think there are going to be like great shorts when they eventually break, but you just can't stay wrong if you're going to try and short these names. You can short them, have a stop, position size correctly, try to build into your short with traction. This is still a name that I think can have just an insane up day until we see that true highest volume ever move to the upside on like a massive expansion candle. I think it still can go a little higher. IREN, another name that's just gone straight vertical from $5 up to $62 since April's low. This did a secondary offering and that's gapping down a little bit. What I want to see before I short this is a rally app like after the gap down showing some strength and then the eventual loss of the daily VWAP after that morning rally. If that combination occurs, then I would enter the short on the loss of the daily VWAP, keep the stop at the high of the day, and then really just kind of hold this for a bigger unwind of the move. GEV, the only energy name that really hasn't been able to rally. We covered LEU making new highs, Oklo. Well, Oklo pulled back a little bit today, but a lot of those energy names were showing strength. This is still under the HVC from its earnings. It's still under a declining 50-day moving average, still under two resistance gaps. Would look for a gap down, takeout of today's lows as the entry, or an uppercut of the resistance gap, uppercut and fail. Then you would enter there. Stop would be above the HVC level. We've got Carvana here, and Carvana at this point is not doing anything out of character. It's a stock that just grinds higher along the 50-day moving average. But the more times you test a level, the more significant it is when you eventually do break that level. And we've got one, two, three, four, five, six, seven, eight tests of this 50-day moving average without really going much higher. Um, Kind of what I was talking about with IWM too, or IWO, where we took out some previous highs, not quite like the highs from the earnings day, but the closing price, and then immediately had weakness, lost the 5, the 10, the 20, came back into the 50 just after testing the 50 a couple days ago. So through today's low would be the entry, stop would be today's high, and eventually this name will have a big unwind. And I think it's going to happen under the 50-day moving average. QBT, another quantum name, one of the weaker ones, and it still is extremely strong. That just shows you how strong quantum names have been. Gap up today, open on the high, close kind of middle of the range. So where RGTI closed middle range after a small gap up, we opened at the high, closed in the middle of the range. So the daily closing range is going to be a little bit weaker here, or at least the percent from open is going to be a little bit weaker. Here, I would just be looking for a break under today's low, stop at today's closing price as the trade. Um, Again, it's more of a momentum kind of drying out trade. AFRM recently rallied up towards highs, two gap downs when we took out the 5, the 10, the 20-day moving average, lost the 50-day moving average with the gap down, came into a support gap, bounced for a little bit. And I think you could trade this on in either direction. If you want to say through the previous 2 days highs is buyable, stop at today's low. I wouldn't argue with you. What I would be looking for is an uppercut and then a failure of that level as the entry. So I could keep my stop at the 50 and the 200 day, keep it a little bit tighter. Or a gap down, then you take out today's low, stop would be today's high in the 10-day. TLN, this is an energy stock, went from 100 up to 430, really solid price action. But then yesterday or Friday, we kind of had a doji. Monday, we had that big gap up, sold off in the 5-day moving average. And today, we had really tight price action on the 10-day. Just looking for a breakthrough today's low as the entry, stop at today's high. SSRM, this is the metal and mining. We took a look at the metal and mining ETF, how that's showing some signs of weakness at this point. And this has already come down to the 10-day moving average, while XME is just coming off its highs. So some relative weakness within the group. The group itself has gone straight up, eventually is going to break down and need to base. This just looking for a breakthrough today's low, stop above the 5 and the 10-day moving averages. Next, we have ARGT, and this is just a global Argentina fund. Uh, the country as a whole, we'll take a look at some of the holdings. Really, really weak. MELI, actually, let's sort this by holdings percent. MELI under the 200-day moving average, and that's the strongest name. You have YPF under a declining 50 and 200-day, GGAL under a massive declining 50 and 200-day, SSRM starting to roll over on the short watch list, VIST stage 4 decline, PAM stage 4 decline, TGS stage 4 decline, BMA stage 4 decline, ARCO stage 4 decline. The entire country at this point really, really weak. I know there was some news that we were kind of bail them out with $20 billion or whatever. That failed. And when stuff like that fails and we immediately break lower and then get nice and tight, a break under those lows, and we could see some real, real panic in this group. So just a break through today's low, stop above the highs of these last 4 days would be the trade. And finally, DFDV. This has been weak for months now. Lower high, lower high, lower high, lower high, lower high, lower high. Resistance gaps all the way down. Just to break through today's low, stop above the gap zone at 1605 would be the trade. So that's going to be the daily recap for Tuesday, October 7th. Again, I apologize for getting this out so late. Will not happen again. If you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Have a great night, and I'll see you guys tomorrow.